following is an update and technical analysis on Nvidia, a company of the technology sector and semiconductors based upon the daily realm, where I had mentioned on the 15th of September 2023, where trading spot price 437.68, and I had issued a breakdown sell signal. In that previous video preceding this video, I had concluded that we were on the precipice of a major transitioning point with negative and bearish divergences constructing on all three technical momentum indicators, going back and establishing and constructing the foundation of those bearish divergences at the beginning of the summer in June, with solid red candle closes below the zero line threshold in the oscillator histogram, and watch for a breakdown sell signal off this major primary support level based upon the beginning of the year, mid-January reactionary lows, just a ton of reaction right across that entire spectrum. And that was going to be one of, if not the major transitioning point to watch on Nvidia. Moment of truth of the year, coinciding with the 50 exponential moving average, 50-day moving average, call it a dual line of price support correlated with the 438 additional price support level. Huge volume at price profile around this range, where the vast majority of the masses had just bag holded and bought the A, just complete all out leveraged pig AI bubble buyers. And here's the update. The entire trade thus far on a complete backtest of the 50-day moving average, the bottom of that primary reactionary uptrend line, the entire trade darn hitting the 236 fibs retracement really to the butt end, especially if you're an active trader. You could have got off. That was good for a 10.6% crash move to the downside. And again, that was bid right here to the button. 236 fibs retracement, call it the 409.52 price support. And here we are honing in on a one-day continuation rally, which was good for a 2.8% pop to the upside. And a little bit of a huge shout out to my subscriber Shenanigans for shedding light on the CEO Jansen's strategic move, discussing his leveraged options play, where these options serve as timing mechanisms, where their significance varying with expiration dates and leap distances, where such actions can be a potential red flag. Although insider sales may often carry no weight and are meaningless, occasionally they can become a short seller's best friend. And here we are dancing around the 413.10, call it a weekly price support level correlated with the weekly interval. I've highlighted in that previous video, and we are dancing right amongst it, especially if you're an active and or day trader. We ended up having a nice clean little spike, especially when we opened up, ended up bouncing right there. And then on a single day note, just catching that reactionary support level. That was good for 2% gains in a single day on a day trade. And we are at a key juncture with the 236 fibs retracement correlated with the weekly and daily interval. The 404.73 price support, major reactionary low reaction right across that extraction, including three reactionary highs amongst that level. And I believe that is the big level right there. 404.73 price support is the most imperative level for long traders and or bull traders to defend heavily at all cost. Whereas short sellers, bear traders, they want to see just a continued deterioration in this momentum on a complete breakdown, and I believe that would issue a strong, solid red candle close below, issuing a secondary sell signal, stops to go off, forced liquidations, margin calls, and I believe a bigger, much larger move to the downside of the 372.18 price support for an additional 6.5% crash. Whereas the 382 fibs retracement right at the 352.08 price support would be your next price support level, correlated with the 200 exponential moving average for a 15.7% crash, if and when we go on to retest that. And then ultimately, my last and final target, correlated with the 200-day moving average, is the major primary reactionary uptrend line based upon the October 2022 lows. And I believe that will be the transitioning major pivot point and or moment of truth for Nvidia on a longer term multi-year price support level. And if we take that level out, that will put in a very heavy technical sell signal, in my opinion, breakdown, correlated with taking out the 200 and 200 exponential moving averages. And then you'll have some much larger wave of selling, in my opinion, on a much stronger move to the downside to additional 306 price support and the 286 price. And then ultimately down, if things get really ugly, to the 618 fibs retracement, call it 259.22 price support level. And really, what is so significant of all turning points, again, I cannot hype up the 404.73 price support, where I have now added a minor primary reactionary downtrend line here based upon the September reactionary highs. I believe, especially if we go on to have a snapback and or counter trend rally, potentially peaking up above it, would add an existing short trade position, if not a hard entry objective short. And then additionally, you have the 438.81 price resistance up above, correlated with the 50 exponential moving average, and then the 50-day moving average hovering up above. So just a wide array of resistance up above that needs to be respected heavily amongst long traders and or bull traders. And what's so significant about this turning point, if we get that snapback and or counter trend rally, this would provide a great resistance up above. But if we take and undercut that previous low out from yesterday's session, and we snap the 404.73 and the 413.70 weekly interval price support, I believe a much larger wave of selling, stronger wave of selling is to come due to the underlying fact that your technical momentum indicators are already cracking below their zero line thresholds in the moving average convergence and the price percent oscillator down below, where the oscillator histogram is just printing solid red candle closes below that zero line threshold. We had a indecisive, which you would call an indecisive green candle close, almost mirror imaging a doji star, yet you had a strong, much stronger than the previous, almost just as strong as the previous day's session, and a strong deterioration in the momentum of the oscillator histogram here, printing down that solid red candle close below with confirmed bearish crossovers amongst multiple indicators. The damage that will be inflicted upon these technical momentum indicators will only exacerbate the damage, especially since it has been defended heavily throughout the entire year of 2023, where we broke down, we had the interest rate hike scare completely shooting out, where we ended up recovering, spurring health back into these technical momentum indicators off the October reactionary lows here, successfully defended that zero line threshold at the beginning of January 2023, and was off to the races, both especially in the moving average convergence, and it has been defended heavily every single time it has been back tested. And now, for the first time in almost an entire year of price zero threshold dimensional support level, we are now breaking down below that level, where only the odds will be increased for a much larger scale drop to the downside, and a variety of long traders and or bull traders rushing towards the emergency exit doors.